Let's talk about MicroStrategy, the best performing stock of the year, as well as the best performing stock since 2020, narrowly beating Nvidia. Full disclosure, I do not own MicroStrategy shares, though I do indirectly own it through my ETFs. But I'm sure haters will say it's not the same. The reason I wanted to talk about this company is because it is so interesting. On one hand, you have people calling it the infinite money glitch. On the other hand, some call it a Ponzi scheme. In this video, I will explain everything you need to know about MicroStrategy, how they've seemingly discovered the secrets to become the best performing company, and more importantly, how long can this continue? But before I start, do join my 10,000 members Telegram chat group to discuss or ask any questions that you may have. In the beginning, MicroStrategy was just a normal consulting company, which was founded by Michael Saylor and two other people. The two of them are not important in this story, so let's ignore them. As MicroStrategy started to grow, the company started going into the intelligence software business. After the 2000 dot-com bubble, their stock price basically went nowhere. This was because the business was stagnant and was barely growing. But then, all this changed in 2020 when Michael Saylor decided to buy $250 million of Bitcoins in order to hedge against inflation and diversify its corporate treasury. This was interesting because back then, Michael Saylor pretty much didn't believe in Bitcoin and thought that it was worthless. After having studied about Bitcoin, he started turning into that weird uncle who can't stop talking about Bitcoin all day long.
Bitcoin.
Like after Tesla's robotaxi event, Michael Saylor be like, the vehicles of the future will be powered by Bitcoin. Trump wins the election, we have a Bitcoin president, while putting a Bitcoin flag on the White House. He even recently started telling other big tech companies to start buying Bitcoins. Meanwhile, his company, MicroStrategy, started going heavy into Bitcoin, and by heavy, I mean super heavy. Since his original purchase back in 2020, he has been consistently buying into Bitcoin when it's up. Then, when it's down, he cries a bit, then he buys some more. As of making this video, MicroStrategy owns a total of 402,100 Bitcoin, valued at over $39 billion. They were the fourth largest Bitcoin holder in the world, right after Satoshi Nakamoto, Binance, and BlackRock. After Trump's election victory, crypto-related stocks like Coinbase and MicroStrategy have been catching attention over the past few weeks. If you're interested, you can explore more crypto-related stocks on Moomoo through the investment team feature located under the US market. Besides stocks, Moomoo also provides information on stock-related ETFs that have exposure to cryptocurrencies. These ETFs focus on companies involved in blockchain technology and cryptocurrencies. Right now, Moomoo offers $0 commission for the US market and also 1 year 0 commission for Singapore stocks. Plus, they also offer a wide range of markets for you to trade in, from the US, Singapore to Hong Kong, China, and even Japan. Moomoo Singapore shares transfer in promo is ending soon, and here's the last chance to win an iPhone 16, 128GB. To start the transfer in process, all you need to do is open up the app, tap on Accounts, Transfers, transfer stock in, choose the market and fill in the details of the holdings you wish to transfer. Moomoo Singapore will handle the paperwork for you and subsidize your transfer fee for up to 200 SGD. Transferring SGX holdings from CDP or other brokers to Moomoo Singapore is now completely online. New users who sign up to Moomoo Singapore will get to earn up to 2,266 SGD worth of welcome rewards. Both new and existing users will get to enjoy 0 commission for Hong Kong stock trading for 30 days, as well as $0 commission trades on US options every month for up to 100 contracts. From now till the 17th of December, if you initiate the first stock transfer and keep it there for 90 days, you get to win up to iPhone 16 128GB. So how did MicroStrategy manage to buy so many Bitcoin when they are barely profitable? The answer is they raise capital by selling something called convertible bonds. The idea of a convertible bond is interesting. That's because unlike a normal bond, a convertible bond has a conversion price. If the stock price ends up higher than the conversion price, you can turn the bond into the stock. But if the stock ends up lower than the conversion price, you can just get back your money. For example, just 2 weeks ago, they issued a $3 billion convertible bond that's maturing in 5 years' time and has a 55% conversion premium. He's speaking the language of the gods. Okay, basically what this means is that by 2029, if the stock goes up by 55%, this bond can be converted into a stock. At the time of issuance, the stock price was $433. A 55% appreciation would equal $672.40. So by 2029, if the stock is higher than $672.40, bondholders will get to convert this bond into the stock. On the other hand, if the stock price stays below $672, the bondholders will just get back their money. For those who are familiar with options, this is basically a call option where you get to participate in the potential upside but without the downside risk. Not just that, if the company ever goes bankrupt, convertible bond holders will have priority of getting back their money first as compared to shareholders, aka the investors, the management, and Michael Saylor himself. To make this even better, MicroStrategy is issuing these convertible bonds at 0% or near 0% coupon rates. So it costs them almost nothing to issue these bonds, basically free money, which they can use to buy more Bitcoins. But then, if this plays out, wouldn't the bonds turn into shares and existing shareholders get diluted? This would be bad, right? Because if you increase the number of shares, the value of each share goes down. For example, over the past 5 years, Pfizer has been increasing their outstanding shares. As a result, their share price has been trending downwards. However, in MicroStrategy case, even though their outstanding shares have been increasing and more shares are on the way, this is considered good news. That's because every time MicroStrategy gets more money, they will use it to buy more Bitcoin, and investors love it, as they will end up with more Bitcoin per share. The term for this is accretive, where share dilution will bring more value to shareholders. MicroStrategy calls this the Bitcoin yield. Now, take note that this isn't the normal yield, where you invest and you get back a return on your money. In MicroStrategy's case, the Bitcoin yield refers to percent change period to period of the ratio between Bitcoin holdings and assumed diluted shares outstanding. He's speaking the language of the gods again. In simple terms, it means Bitcoin per share increases over time. Right now, they are aiming for 6 to 10% yield, meaning they are planning to increase their Bitcoin per share by 6 to 10% every period. And they plan to do this by, you guess it, issuing more convertible bonds and equity. From 2025 to 2027, they plan to raise a whopping $42 billion worth of capital, with each year bigger than the last. And here, you can see how it is starting to look like an infinite money glitch. All they need to do is get money by issuing more shares or convertible bonds, take the money to buy Bitcoin. Investors see the Bitcoin holding goes up, that gets them excited, so they buy the stock, pushing the share price higher. The higher share price allows MicroStrategy to sell even more stock and buy even more Bitcoin, and the cycle continues. But then, why would investors rather buy MicroStrategy and not Bitcoin itself? The answer is leverage. Right now, if you take MicroStrategy's market cap and you divide it by the total value of Bitcoin holdings that they own, you get a leverage or NAV premium of 2.3 times. So if Bitcoin goes up by 10%, MicroStrategy would theoretically go up by about 23%. Though, of course, this isn't a fixed number and it can go up and down depending on the sentiment. Like back in January 2024, when the sentiment was bad, the NAV premium was at 0.9. But as Bitcoin price started going back up, the excitement went up as well. So how legit is this strategy? Did they really discover an infinite money glitch? Or is this all a Ponzi scheme? By definition, this isn't a Ponzi scheme because convertible bonds are definitely a legal debt instrument and Bitcoin is definitely a real asset and not some fake digital thing, yeah. Otherwise, the SEC would have chokeslammed Michael Saylor already. Not literally, of course. So then, what's the trick to this? The trick is that this strategy requires new money to come in order to work. As long as you can keep raising more money, you can keep improving the value per share. For example, if you check all the previous convertible bonds, all of them are already in the money as the stock price has risen. It is only the most recent convertible bonds that is out of the money. So how? Just raise more money to buy more Bitcoin lor? This sounds familiar. Like, if you take this image and move it around, you get something that looks a little like a pyramid, huh? So what could go wrong? The risk here is that if ever the convertible bonds stays below the conversion price, investors will want to get back their money. In most cases, there wouldn't be any issue as MicroStrategy could just raise more capital to pay back the previous bondholders. The issue comes when investors lose confidence in MicroStrategy and Michael Saylor. When that happens, he will not be able to raise enough capital to pay back the bonds. He would then need to sell his existing Bitcoin to get back the money. That will put selling pressure on Bitcoin. Bitcoin price falls, MicroStrategy stock falls even further, and this will turn into a death spiral. Will this happen? Maybe, maybe not. But this is certainly possible, especially during a crypto bear market. Not just that, another problem with investing in MicroStrategy is that it isn't just purely a leveraged Bitcoin play. You are betting on a few more things, like Michael Saylor not doing any funny stuff, the NAV premium remains high, and short sellers not coming after the company. Though, I also have to admit that things are certainly looking great for MicroStrategy now. Bitcoin is gaining traction among governments, public companies, and worldwide. Heck, even Tom Lee is bullish about MicroStrategy and thinks that they are creating significant value for shareholders. How will this all end up? According to Michael Saylor, his endgame is to become a Bitcoin investment bank and create Bitcoin capital market instruments for it. Will this ever happen? We will just have to wait and see, yeah? As for me, I will just stay far away from this stock as it is too risky for me. Personally, I believe that if you really want to invest in Bitcoin, it would be better to just invest in Bitcoin itself. Otherwise, if you want to do a leverage play on Bitcoin, you could just use margin or LIPS on a Bitcoin ETF. Not saying it's a good choice, but it's definitely one way to do it. But what do you think? Are you investing in MicroStrategy? I would love to hear your thoughts. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.